let's talk about dividend income that actually feels substantial. Have you ever wondered how much you'd need to invest in dividend ETFs to generate a steady cash flow, say 12,000 euros a year or 1,000 a month? And if you wanted to reach that income level right now, how much starting capital would it take? I picked a few popular dividend ETFs that we can actually buy here in Europe. For each one, I calculated how much you'd need to invest. Now, here's the thing. Not all ETFs are the same. Some offer a solid dividend yield, but only modest dividend growth. A classic example is the Vanguard FTSE All-World High Dividend Yield UCITS ETF. Others start with a lower dividend yield, but they make up for it with strong dividend growth over time. A good example here is the Fidelity U.S. Quality Income UCITS ETF. So, from each category, I selected 3 popular ETFs, big funds with plenty of volume and a reliable history, and ran 2 calculations. First, how much would I need to invest today to generate 12,000 euros a year in dividends? Second, how would that income grow over time if I simply take the dividends and let dividend growth do the work? Quick disclaimer before we dive in. This is not financial advice, just my own opinions and experiences. All right, let's get to the fun part. The ETFs we'll be looking at today. Category 1. Solid dividend yield with a moderate dividend growth. Vanguard FTSE All-World High Dividend Yield ETF. VanEck Morningstar Developed Markets Dividend Leaders ETF. iShares STOXX Global Select Dividend 100 ETF. Category 2. Lower dividend yield, but much stronger dividend growth. SPDR S&P US Dividend Aristocrats ETF. Fidelity US Quality Income ETF. And finally, Fidelity Global Quality Income ETF. By the way, this one happens to be my personal favorite. I've already covered it in a separate video, but let's keep going. I've run the numbers for each ETF using past performance to calculate 3 things: the average annual dividend yield, the annual dividend growth, and the annual ETF price growth. Here's the breakdown. We'll be using these figures in the next steps of our analysis. Keep in mind that the dividend yields shown here are averages, calculated across all past distributions. The actual, current yields of these ETFs may differ somewhat, but I find that using the average gives us a more realistic basis for making projections. Oh, and just so you know, I used the MarketBeat Dividend Calculator for the next set of calculations. It's a pretty useful tool for figuring out cash flow. If you're interested, I could make a separate video to show you how to use it, step by step. All right, let's keep going. For these calculations, I've made a couple of assumptions. First, dividends are not reinvested. In other words, the cash flow is taken out and consumed directly. Any increases in payouts therefore come only from dividend growth. Second, to keep things simple, I'm ignoring dividend taxation, since tax rules differ from country to country anyway. And now, let's move straight to the first ETF. Vanguard FTSE All-World High Dividend Yield ETF. For this ETF, I've worked out the following numbers. So here's the big question. How much would you need to invest to immediately earn 12,000 euros per year in dividends? The answer? Roughly 340,000 euros. Yes, that's a substantial amount. But what happens to the cash flow if we wait 10, 20, or even 30 years? Well, given the modest dividend growth of around 3% annually, the increase in cash flow is relatively mild. In essence, it just about keeps pace with inflation. That's the story for this ETF. If you found my insights useful so far, a quick like and subscribe helps the channel reach more investors like you. Thanks. And now, let's move on to the next ETF. iShares STOXX Global Select Dividend 100 ETF. Let's start with the basics. This ETF offers a solid dividend yield of 4.5%. For both dividend growth and price appreciation, I've assumed a modest 3% annually. Why so conservative? After all, the official data shows a dividend growth rate of 5.7% since inception, and a total return of 9.3%. Sounds impressive, right? But here's the catch. The ETF launched right after the financial crisis, when prices and payouts were at rock bottom. That timing skews the long-term averages. If we look at the actual distributions and price performance over the past decade, it's been mostly flat. Sideways movement, not much growth. All right, now for the big question. How much would you need to invest in this ETF to earn 12,000 euros per year in dividends? The answer? Around 265,000 euros. That's 75,000 euros less than the Vanguard ETF we looked at earlier. It shows how much of a difference just 1% more in yield can make. And what happens to the cash flow if we wait a few years? Well, with an assumed dividend growth of 3%, we end up with the same figures as the Vanguard ETF. A modest increase, just enough to keep up with inflation. Okay, let's move on to the next ETF on our list. VanEck Morningstar Developed Markets Dividend Leaders ETF. Now things are getting interesting. This ETF stands out across all three dimensions: dividend yield, dividend growth, and price appreciation. A well-balanced mix like that? You don't see it often. So, what kind of investment would you need to earn 12,000 euros per year in dividends? The answer? 260,000 euros. That's very similar to the iShares ETF we just looked at. But here's where it gets exciting. Unlike the iShares ETF, this one shows real potential for long-term cash flow growth. If the dividend growth rate stays consistently high, we're looking at nearly a doubling of your annual cash flow every 10 years. And for a high-yield ETF, that's impressive. No wonder this ETF is a favorite of many dividend investors. The numbers back it up. All right, that wraps up this one. Next up, ETFs from the category of low dividend yield but high dividend growth. SPDR S&P US Dividend Aristocrats ETF. Here, we're starting with a modest dividend yield of just 2.3%. But in return, we get solid dividend growth and decent price appreciation too. So, what would it take to earn 12,000 euros per year from this ETF? Well, since the yield is only half of what we saw with the VanEck ETF, we'd need to invest twice as much. That's a staggering 525,000 euros. In exchange, we get respectable dividend growth. At 7% per year, your cash flow could double every 10 years. And that's exactly what we see in the table. One thing should be clear by now. With ETFs like this, low starting yield but high dividend growth, you need time on your side. Dividend investors with a long-term horizon might want to consider adding these kinds of ETFs early in their portfolio. All right, let's move on to the next one. Now we come to my favorite ETF, the Fidelity Global Quality Income ETF, which also happens to be a major part of my portfolio. Similar to the SPDR S&P US Dividend Aristocrats, this one combines strong dividend growth with solid price appreciation. The average dividend yield sits at 2.8%, quite respectable for a dividend growth ETF. Yes, the current yield has dipped a bit, but we're using the more meaningful long-term average. So, how much would you need to invest to earn 12,000 euros per year? That would be 430,000 euros. Still a hefty sum, but about 100,000 euros less than the SPDR ETF. And the cash flow growth? Outstanding! If you manage to invest 430,000 euros and simply hold the ETF for 20 years, you'll likely not only enjoy solid capital gains, but also collect around 52,000 euros in annual dividends. Pretty wild, right? Of course, there are a few things to keep in mind. First, long-term availability is something to keep in mind, as ETFs can evolve or be replaced over time. Second, taxes aren't included. Depending on your country, you might have to hand over 20% to 30% to the government. But still, let's keep going. Let's wrap things up with the final ETF in today's comparison. Fidelity U.S. Quality Income ETF. Yes, another Fidelity ETF, but this time it's not globally diversified. It's focused entirely on U.S.-based companies. And what's inside? A lineup of strong dividend growth stocks, many of which also deliver impressive price performance. That's why this ETF shows 10% dividend growth and 10% price growth. Sounds unreal, but that's what the numbers say. With a dividend yield of 2.4%, you'd need to invest exactly 500,000 euros to earn 12,000 euros per year. And if that dividend growth continues over the next 10 to 30 years, the cash flow could become seriously powerful. Sure, 500,000 euros is a lot of money, but even with 100,000 euros or just 50,000 euros, you can still get a clear idea of how the future cash flow might evolve. For example, with 50,000 euros invested, just divide all the values in the table by 10. And with that, we've covered all the ETFs in today's comparison. To finish, I'll give you a quick overview of all the ETFs and all the key numbers. In this video, we ran a thought experiment. How much would you need to invest in each of 6 popular ETFs to generate 12,000 euros of annual cash flow? We then checked how the payouts could develop in the next few decades. Now, it's clear. ETFs with higher dividend yields require much less starting capital to hit that 12,000 euro target. But here's the catch. Most of them show very little dividend growth, which means your cash flow barely increases over time. There is one exception, the VanEck ETF. It not only pays out generously, but also delivers solid dividend growth. That makes me think the underlying Morningstar index is really doing something right. On the other side, we have the low-yield but high-growth ETFs. These work in the exact opposite way. Because of the lower starting yield, you'd need around 500,000 euros invested to immediately reach 12,000 euros per year. Let's be honest. Very few people will do that. These ETFs are designed more for the long accumulation phase. If you're willing to wait decades before enjoying real cash flow, dividend growth ETFs can be very powerful. With some of them, payouts double roughly every 10 years without you lifting a finger. Isn't that incredible? Personally, since I don't plan to live off my dividends for another 10 or 20 years, I focus more on these dividend growth ETFs. But that's just my strategy. Of course, everyone has to decide for themselves which approach fits best. Often, a mix of high-yield and dividend growth ETFs can be a smart choice. So, tell me in the comments, what's your strategy and why? That's it for today. Don't forget to like and subscribe. Thanks for watching, and I'll see you next time.